in the call the last time, but we did an analysis together of this list of pairs that you can see here on the right. Okay, not this, not this. We also looked at of gold, but yeah, this was a trade I took today. But we also looked at gold, but not in depth. But we did look at Euro USD, GBP USD, GBP AUD, Euro AUD, USD CAD, and these two that were the last option. So today the call is learn and earn. Let me explain to you guys what it is about. Okay. The first thing is I will always explain to you how you should read the market on a weekly basis. Let me try to find, I'm gonna grab a neutral. Okay, let's grab this one. Whatever you have a market like this, let me go and hide this guy and this. Okay, so we have a clean chart. Okay, you see that? Whenever you have a chart like this, it's very difficult if you don't have references around time. So you need to understand what is the timing. Okay, so most of the time what I do when I'm coming, like today it's Wednesday, right, in the middle of the week, I will look to find the beginning of the week. So I will go on H1 or H4, for example, and I will go look for Monday, the first hour of Monday. Okay, Monday 00. Where is it? Here. This is the true open of Monday. Then I will pull back. I will pull that line, take it and take it back to Sunday 5 p.m. This is exactly when the market opened. You can see the gap here. You can see the gap that formed around here. This is the opening of the new week. So you can mark this with a line like this, and you can call it the opening of the new week, weekly opening. Okay, you have the weekly opening here. You see that? And then you look for the next week. So if I take the vertical line here and go look for the next Monday, you see, I will find Monday. So now what you should do here, okay, I was just showing you. Now we go on the actual time here. Now we go back, we look for the Monday. Okay, Monday is here, and Sunday, 5 p.m. Okay, I got it. 5 p.m. Sunday, it's here. You see that? At the opening. This is our week. Okay, now I will take this like I showed you. Okay, this was just to show you how you do it. So you go on the last candle and you go back until you find 5 p.m. of the last Sunday. Okay, when you have that, you will go look for the next Sunday. Now let's scroll. You can see it down here. Let's scroll. We have Thursday, Friday, and Sunday. And here, this is 1 week. We are trying to find what price will do in this week with the beginning of the week here, lock, and the end of the week here, locked. Okay, what did price do now according to our price action? When I have such price action as we did at the beginning of this month, which is February, but also the beginning of the week, we did look at the market on a higher time frame. We went on the daily, and we wanted to know what will the daily do, knowing that we closed bearish here. So Monday, okay, started with a bearish move. We closed bearish. Monday started with the bearish move, and then Tuesday went up. but most of the price action we can see here was bullish. So we wanted to ask ourselves, is price gonna go back up or it will continue lower? And that's what we did here when we went to look at Euro USD. Remember, we took this, the gap was here on the daily time frame. We had the open, you see the gap? We have this gap, and then we went and on H8 and H4, and we marked certain levels. We have this, that was just a breaker, because we swept liquidity down back here, and price was supposed to go either here or here. You see this arrow here, right? You remember on Sunday, we marked this. We did not mark this today. This was the beginning of the week. We marked this because we knew what price would do. Price will go back, look for this level, and then give us a trade. I did not send a trade on Euro USD. Why? Because another educator already sent a sell. So, but I had to show you this is what we did last week. Let me go find it in the explanations we had. I'm trying to find it and show you guys. For those who were not there, I'm trying to find where. Okay, I'm trying to find it real quick. You see? Yeah. I'm looking for Euro USD. The quality must be 1080, so you can see whatever I'm doing here. Okay, I'm looking for Euro AUD, no, Euro USD. Quickly, Euro USD. This is GBP USD. I'm trying to show you how we marked all these levels before. Yeah, you see here, this is GBP. I'm looking for the Euro USD. Euro USD was just before this. Yeah. I want to explain to you something, so I have to find it. Bear with me, guys. Do you hear the voice of the video? Do you hear the sound or not? Type in the chat, please. I want to know if you can hear the voice in the video. Okay, no problem. Okay, so I'm going to explain it by myself. Okay, no problem. So what I was saying here is, you saw how price started the week on Monday here, and then dropped, and Tuesday came back. I prepared myself to see this move. Why? Because I know price was supposed to go bearish. Why? Because of the weekly. How we close on the weekly with this very big wick here, I knew I was expecting to have a bearish week, but the bearish week will start with a bullish move first. But in this case, as we opened with a gap, I was expecting price to come back inside here, touch this level, and then drop. And this is what we had today. So the trade, after touching this daily zone, you would go on H4. H4, it's easy. Now you can just target to have this as your key level and trade from here. Because when you drop on M30, when price get out and then price comes back, the next engulfed candle on M30 is this one here. Here, and as soon as price get out and then comes back, you can touch on M5 And this is where you should enter now, because here I will refine my N5 level. I have this engulfment, this is my sell, and this is where I should sell. You see, this is how I give you trades, guys, and target this. So the trade is still running. This is actual. This is exactly what the price is doing right now. And we predicted this on Sunday. It's a 3-hour trade, but I did not send it. Why? Because another educator already sent a call on Euro USD. So you understand that I did not and I couldn't, because I don't want you guys to be confused. But you understand what I'm teaching you here. H4, break out of H4, we come on M30, price comes back. I'm waiting to see the first engulfed candle. Okay, the first engulfed candle that I have is here, like I said. And as soon as price get out and comes back on M5, inside here, where is the engulfed candle that broke out? We have two. We have, this is option 2. I hope you remember what I'm talking about here, because I already taught you guys how to trade this option 2 and option 1. Option 1 was here, and it was also a valid trade. Okay, you have option 1 here from the first leg that took out price out of this range. This is the M30 range. You see, when price broke out of it here, it came from here. That is our first entry. And after confirming the break of structure, price retrace inside, I don't care about the fair value gap or anything else. I just want to see price create another engulfment. The first one that I have is this one here, and price came back here around midday, like 12:20, and here it's around 10:15. And you had 2 trades today. You could have entered on Euro USD during the New York session. Okay, so I'm showing you this. Why? Because if we go now on GBP USD and we go back on the daily time frame, what did we say? Price was bearish, but more bearish on the Euro USD. On GBP USD, we saw this bullish move. We marked this key level. It was a key level. You see that? All this, Monday, Tuesday, Wednesday, all these 3 candles did not exist when we did the analysis. This is what we did. This is what we marked as soon as we saw the week start. And then after Monday, we did a call, and I marked this level, and I said, when price will come back here, we will have it drop. Why? First of all, to cover this gap, and then next, because we have a key level here that we need to retrace to before we continue higher. Also, after breaking this, we know this is an expansion. And what do we have after an expansion? We have a consolidation. But before we have that, I know price would come up before we drop. And this is exactly what we had. When you go on H1 and you observe, this was on Monday. This was on Monday here. Forget about these candles, these big candles. They don't mean nothing right now. But you can see here price that I said would go up there. Okay, now this is still Monday. Created this, and then we started Tuesday, continue higher, took out these highs, and then price is shooting down now. You see? And this is where we are right now. So what I'm trying to tell you now, we have an opportunity on GBP USD. We can go on H4 right now. H4 on GBP USD. We take the rectangle tool. This is actual. This is not just insight or explanations. This is what we should actually do, and that's what I will do. You have to sell from this zone, because after rejecting here, this was a retracement inside of this range. We know that if we take from this range here to this, we just hit the 50%, okay? And if I pull it a little bit more, it's exactly on the line. So I know we just hit the equilibrium of this range. We are dropping lower. We already closed below this guy here. Who is this guy? This is the breaker. The breaker is the last demand zone before we take out this liquidity. Before we take out liquidity, we took it out from here. And if I go on a lower time frame, on a higher time frame, sorry, and I can see how price took this liquidity here on a higher time frame. Where did this come from? On this demand zone. If you go on H4, you have one. If you go on H1, you still have one here. Okay, so this zone is the demand zone that got broken, and as soon as we broke it, it became a breaker. Okay, this is what you call a breaker. The breaker, okay, it's a validation that price will continue lower. So above my breaker, I have an H4 key level. And this H4 key level that I showed you here, let's forget about the breaker now. I see that price is going toward it and then dropped. So I confirm that here I have a bearish intention. I will take my alert, bring it to the H4 level now, and wait for price to return here. As soon as I will listen carefully what I'm going to say, as soon as you will hear the alert sound from this movement, you will drop on M30. And inside that M30, you have the first thing here. We already have the first option on M30. This could be the entry for someone who is aggressive, but I will wait for price to come here, create another move, and from that move, I will mark my M30 inside. So this will just be ignored in that case. But if you took this, this will be your entry. So you will take the entry here from M30 inside, and then you sell. But if it's not that case, you will go here and find another M30 engulfment. From that M30 engulfment, you will now have a move coming back inside. I think during London or New York session, remember this is GBP USD. Here, I will wait for price to create an engulfment on M5. Okay, I will go now on M5 and find another engulfment inside here, and this will be my entry. I will put a sell stop, protect above my M30 or this one, depends on your risk appetite, and then I will target this low here where the price stopped, or I will go look for the previous daily low, which is around here or down here. This will be the weekly lows, because since Monday, this is the lowest point we created. So I think this is what we should take as trade tomorrow as soon as price reach this level. Okay, guys, this is what we'll be waiting for. I'll be waiting for this. This is an M30 sell. And here we have an M setup. We have a sell setup. And we will ignore this for now, but I know I can enter from here. Depends though if price comes in my zone in the right time. If it comes during London session, I will enter from here, but I know price will always retrace and come back. Okay, this is why you sometimes take trade and then you put your stop loss at break even, and then price will come and take you out with break even because you entered early. Okay, so I'm not gonna be in a hurry. I will wait, but I know I have two zones. I have this guy and I have this guy, and this could be my entry for tomorrow. If I see that, I will take it. It's a 4-hour trade, probably 18 pips of stop loss and 18 pips. Let's take this to 74 pips. This is 4R. Let me reduce a little bit more. Boom, I think it's here. Yeah, this is 4R. This could be the target. And if you are more conservative, you can put 20 pips. You see, you're just above this level here. And instead of this, you can just target 3.8 R. You see, this could be what we should take tomorrow. So now we're gonna wait. Price has shown us the direction. We marked this in the beginning of the week. We didn't know what price would do, but now I can see how price is doing exactly what we predicted, and I will wait for price to drop down. So I'm gonna put this as a bold line, so we know exactly what price is about to do here. And tomorrow price will drop here. Okay, so we did a big part of the call, but I want to teach you something, guys. This call today is called Learn and Earn. I'm gonna give you some secret about how to scale a small account. If you want that, type zeros in the chat, please. If you want to know how to scale a small account into a bigger one, please type zeros in the chat. Type zeros in the chat. I don't want to go on a subject that you guys are not interested in. We can still talking about charts. I can show you another pair and another pair. You see, everything is just happening as I marked. So we are waiting right now. But if you want to know how to scale a small account to a bigger one, please let me know. I want to give you some tips here, and I will show you exactly how you can do it on the chart. Okay, guys? I want to see some zeros. I only see 2 people here. I want to see some zeros. Please type zeros in the chat, please. I'm sorry if my English is not perfect. I know sometimes I hesitate. I'm a French guy originally, but I will do my best to explain to you guys. Type zeros in the chat if you want me to give you that. I saw Juve. I saw, okay, Gwen. Okay, Gwen. Thank you, Louis. Who else? Who else? Who else? Oh, Hakel is there. Okay, thank you, Hakel. Okay, thank you, Hakel. Okay, let's do this. So what I'm going to show you now is the compound effect. I'm trying to show you something here, the compound effect. Let me try to find something here. I have something prepared. Okay. I'm going to show you guys, because most of the time people tell us that you cannot really make money if you trade with a small account. I don't think that's true. I know it's hard, but if you know the system, if you know what you're expecting and what you are looking for, you can actually do it. Okay. I'm trying to open it here because I want to bring it on my screen. Okay, give me a minute, guys. This is a document that I took from howtotrade.com. Okay, let us try now. I think you are seeing that. Okay. Okay, guys, do you see what I have here? Please type in the chat zeros if you can see what I'm. Yeah. Perfect. This is real stuff now. Okay. So let me explain first of all what we have here. Okay. We have, let me take the red pencil. We have how to double your trading profit in 70 days. So this is an estimation. The numbers can change, okay? I'm just trying to explain to you how the Forex market can allow you to really bring your account to another level. We have a column here. The principal is 500, okay? The interest that you will make, it's 10%, okay? And the compounding is 12 months, okay? Every number here is just an estimation. I want you to understand that, okay? This is the Forex compounding strategy for daily pips target. So you target 10 pips 10 pips, what does that mean? Let me show you on the chart. What does 10 pips means? Let's go on the euro that actually gave us something today. I'm going to show you here. Option 1 and option 2 that we had. Let's go on M15, M5. It was on M5. You had option 1 around 9 a.m. The zone formed, and around 10, 1 hour left later, price came here. We had a stop loss of 10 pips. This is stop loss of 10 pips, okay? And we target 10 pips. You see that? Do you see that move here? That small move that I'm showing you here. So what do I mean by that? I mean, when price came here, touched this, and did this, and it's done. It's 1 hour trade, okay? Even if we don't take 1 hour trade, I'm just explaining to you what 10 pips means. Why? Because from here to here, do you see what it's written there? It's 10 pips. You see that? This is what you need to do per day to compound your account. Now, let's go back to what we were looking at. So I was saying that all you need to do is to have 10 pips per day, okay? 10 pips per day. Daily gain in percentage is 1%. So you just risk 1% of your account and you have that lot size. If you start with $1,000, I just use this because I know 1,000 will allow you to have a nice idea about the calculation. So if it's $100, you just divide this, you just put 1.0, okay? 0.01, and then you know that this is for 100, but you will gain 1% and you will still risk and target 10 pips, okay? Now let's see the periods, okay? Because this, you should see how the trading days, you trade every day, 1, 2, 3. Every day you are trying to trade and put 10%, what I mean, 1% per 10 pips with your lot size here. And all you need to do is 1% gain. So for 1,000, you just make 1%, and now it's 1,010, okay? And when you have the 1,010, that is now your initial balance, because we had the initial balance as 1,000. Now the 1,000 plus the benefit that we made now is the gain that we had was $10, okay? We use it on top of the 1,000, and then we look to gain 2% here. Gain in percentage is 2.01. And then we take another 1% of the 1,000, we add it here. You see how it's growing? You see how it's growing? Look here, what we have here, 10%. This is another approach. You have 500. All you want to do, okay, is the interest of 4.17, which will give you 500 and 4.17. This is the ending balance. Then you will begin with this balance again, and then look for the same target. Then it will add up here. So if you consider these as your trading days, and then you drop and you continue lower, okay, after 1 month, because I think this is approximately 1 month and 3 days, you will have a daily gain of 13, and then your account balance, because the gain in percentage, okay, must be 1%, then you add 1%, then you add 1%, then you add 1%, you will have 1,400. But now let me explain to you, until you continue and you reach the 100 trade, you could double your account. This is if you risk only 1%, and whatever you make, you risk it all above the initial balance and look for another 1% above it, okay? You see how the gain is adding up. 10, 10.10, 10.20. Daily gain is adding up, adding up, adding up. And whatever you do here, the gain in percentage is also growing. Okay? And the balance. Is there any question until now if you guys did not understand anything? Because I will show you now how you can do it with 10% and you can grow really fast your account. Is there any question? Let me go down here. Now, you can see here, let's say you have 500. Okay, I'm going to explain to you here. Okay, now imagine you have 500, okay? You risk 1% of, you have two approaches. You have one that has the fixed ratio, and you have one that have a fixed amount. Okay, the amount is supposed to be one number. Like if you say you will only risk $5, okay, whatever you make, you put it on top, you will come and risk $5 again. That will not be a compound. You have a fixed amount. But when you put a fixed ratio, you will have to choose a percentage. Let's say 10%. 10% of 500 is $50. If I say 5%, it should be 25. This is actually what I do. I take my $25, okay, but I don't see 25 as a fixed amount. I see it as a percentage. What is this? It means 5% of my account. So if I risk 10 pips equal to $25, I will have a size to put. It should be something like, I think for 500, if we go and I have a risk calculator inside Novus, but that is not the point. What I just want you to know here is if you have the stop loss like this, and then you change the stop loss, you still risk the same amount, the lot size will change, okay? But you know how much you are risking according to your account. So when you come back here, I'm showing you now, if you risked 25%, okay, this is what you want to make, right? You make 25. So now it's 5, okay? If I'm looking for the 5% of this, okay, it will add up as an amount. The gain is just in percentage. When I have this is a gain, right? I will compare to 500, it's 500, it's 5% gain. But when I will take this 5% from this guy here, let's do it, it's simple math. I want you guys to understand 5% of 525, it's just like this, times 5, okay? Let's do it. Do I have a calculator here? Let me find one. I want you to understand how we do it, because this is just game of money management. Money management. So here, so we have this, right? 0.5. Now, this is the amount you will risk. The risk will not be $25. It will be 26.25. It still means 5% of what? Of this guy here. But when I put the benefits, now let me go back here. I really hope I'm explaining it properly. Let's go now. Trying to clean this. Okay. You have 500. You risk 25. Let's say you make $25. Okay. It's just 5% of this guy. Now, on top of this, you add the interest, the benefits of your trade. Now your bank account is, or your trade account is $525. You want to risk the 5% again. You don't cash out. You risk with the same amount. Okay. The 525 5% of it is 26.25. When you risk that, you will make the same amount here that we had. Let's just put here, plus this guy here. Okay, you see? And this is how it will grow. Let me show you. Okay. Okay. I think now you see, right? And here, if we look for the 5% of this one, let's do it one more time. The 5% will be times 5 divided by 100. Oh, sorry, this was not correct. So it's this 25 times 5 divided by 100. Now this is the amount you will risk. And also this is the amount you are looking for. This is in case you are looking for 1 hour trade. I'm showing you the power of the compounding in Forex. So if you have this 25, let's say 27.5, okay, let's just write this down, 27.5, it's the 5% of this guy here. But if now I'm expressing this in percentage according to the beginning that we had, then I will have 5% here. Here it will be a little bit more, and here a little bit more. That's why you can see here the percentage are growing, okay? The gain in percentage, okay? How much did you gain in percentage? It's growing here. Now, I'm showing you this why, because the problem in Forex, people come and just don't know how and what to expect. So if in 3 trades like this, you made 1 trade here, 2, 3 trades, you almost grew your account, because now it will be this guy here plus the initial sorry, this is now what you have in your balance. You see that? I want to be correct. 25. You see that? This is now the end of the week. Let's say you did this in 1 week. Okay? How much did you make? You made 78 point. This is more than if you were making $25. Okay, you cash out, then you come and make another $25, you cash out, and then you make another $25 and you cash out. Okay, the thing that's using compound will grow, and it will exponentially grow your account. Need to control all this and then delete. Let me clean this. Sorry guys, I need to clean this. Yeah, compounding will help you bring your account up. And after 100 trade with the same calculation, okay, you will have an equity curve like this. It will start slow and then it will explode. Why? Because as you keep your profit in the account, your initial balance is moving up. And at some point, you will have 10,000 in your account, and you're still risking 5%. It will not be the same as 500. Okay? This is how people take the compound effect and put it in motion in their accounts. But let me tell you now one thing. I know everybody have heard what I just said here about a compound, but I want to tell you something that is very important. You have to take in consideration 3 factors. You have to take in consideration 3 factors. The 3 factors are the time. How much time are you willing to trade? The second one is your risk reward. The one that we used was 1, but you can also use 2. Like in this example here, this was not a 1-hour trade. I never trade a 1-hour trade. Minimum 2.5, like 2.5. The compound effect will act even more, because after 1 trade, you'll make 10% of your account. And this is what I expect to see here, okay? You see how price came and touched my profit after 1, 2, 3, I think 1 hour. I'm in profit. This is not $25. This is not 5% of benefits. I risk 5%, but I will make 10%. If you come here now, let me show you. If you come here and you know that you make 2.5 R, that's what I advise you to target. It's very achievable with this strategy that I showed you. So how much time, like weeks? How many weeks do you want to trade to reach your goal? 3 factors will change your plan. You must have a plan. That plan will be defined. I want to do how much before July, for example. You have to count the weeks so you know what to expect, okay? And after you know your R, how many trade per day? How many trade per day is the frequency? This is the duration. And this is the interest. How much time you will do to make it. Duration. Let me change the color. Duration. Here, it's your benefits per time. Benefits per time is just interest. And here, it's frequency. Trade per day. Frequency will tell you how fast you can go. This is how far you can go. And the benefits is what you're looking for. This is your reward. How long will I go in terms of time? How fast? Frequency. And what will I make per milestone? If I can say 1 trade is a milestone, how will I make per trade? Okay, so now you know what's characterize your plan. The second thing, I hope you just got these 3 factors that will affect your plan. Now look at this. You have the 3 factors that will affect your plan. Let's clean this. Keep the plan there. Okay, I hope it's clean now. Still have some stuff. I want a bigger rubber to take this off. Eraser. Okay, good. Now look, you have this. Okay, you have the 3 factors. The duration, how far are you going? So your compound interest is how much time are you going to take? But how much time will also be affected by the frequency, because we say that 100 trade here or 100 trade here, but the problem is you don't know when will be the 100 trade. Maybe in 10 years. What is your frequency? So your frequency is very important, but your frequency, which will also affect the duration and your benefit total. So the total benefit will be affected. Just dropped my phone, sorry. So the total benefits and the duration will be affected by the frequency. If you go fast, you'll make money fast and you will reach here fast. Okay? But if you go fast, you should take in consideration the strategy. You should take in consideration the strategy, but also the risk must be in accordance to your style. What is the style? The style is scalper, day trade, or swing trade. Why am I saying this? Because some people will take their strategy that I use on scalp and come and use it on day trade, and they will lose all their money. Some people will have the $500, but they want to make 100 trade per day scalping, and they lose all the money in one day. You must know what you are doing. You must understand. You must understand that price will give you moves. So before you define your style, you define, because the style will affect how much you risk. If you are taking one trade per week, maybe you can take 10%. It's okay. Let me tell you why. Someone can take, let me show you. Let's consider this is a scalper. Okay? This is a scalper, Mr. S. We have a day trader, Mr. D, and the swing trader, Mr. SW. Okay? This guy make per day. Let's say this is 1 day, this is 2, and this is 3 days. 1, 2, 3, 4. Okay, 4. Okay, it's a week, right? 1, 2, 3, 4. Okay, this is a week. We ignore Monday. We only take Tuesday, Wednesday to Friday. Let's now take a big guy here. Let me take this, and I will make every trade that's green, it's positive. This guy won once, twice, loss, 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 and won. All this in one day. 1, 2, 3, 4, 5, 6 trade in one day. The day trader came, we will just do the same thing. 1, 2. He took 2 trades, one in London session, another one in New York session. 1, 2, 3. Okay, let's go. 1, 2, 3. One win. One win here. And it still have some time to go. Okay? It still got some money. You can win again. You can lose. But this is now scalping. It's not the same thing. Okay? So you should consider how many trade per day, because you know your rhythm, the frequency. You can lose here. You can win again. Okay? So these 2 days are break-even trade. Here he lost, but here he won. But remember, we have 2.5 R. Did he win the week? Yes. Now let me show you the swing trader. What did the swing trader do? They have the same luck, same stuff. Okay? He made 1 trade on Tuesday, 2nd here. That's all. He took 2 wins. And next week, maybe he will lose. But this week, he did not trade on Wednesday, did not trade on Friday. How many times this guy will lose and how much time the emotion will affect him? So you should know how to choose your style. And in accordance to your style, you should make realistic targets and realistic plans. What I suggest and what I give you as an advice is to always look at the weekly move on Forex, and then you plan different entries in that week. Okay? Guys, are you following what I'm saying? You know now the frequency is very important. Okay? Now look at this. If you have the beginning of the week here on Monday and the end here on Friday, what you expect to find is to see a price move like this, boom. This is Monday and this is Friday. Now, let me show you one thing. What you should know here is price will reverse phases. I'm giving you phases. The phases of the market. Market will do what? Expand. What again? Consolidate. What again? Retrace. And what? Reverse. You have expansion. Also, a reversal is an expansion, but in the other direction. A consolidation is when price move like this. You have a retracement. After an expansion, price have to retrace inside the range. So it means what? When price was doing this and then broke structure, it has to retrace before continuing higher. Okay? And if price breaks structure like this and come back, let me reduce the size, come back inside and retrace, you find your entry here, you continue higher. So you must know how much trade you could have in a week. Let me tell you why. Because you don't have endless opportunities in a week. You have two reversals and many continuations, but that will happen in your sessions. I don't know how much and how many you can have as luck to find the exact reversal inside of your session that you're trading. Let me show you the reversals. Reversals will be in red. Here it's a reversal. It means what? Price started somewhere here, then it reversed here and continue higher. This is continuation, and then reversed here. You have two opportunities, right? Then price came here on Thursday, reversed, but then took you out, reversed, but then it was Friday. Maybe it was a news, maybe you don't know, okay? So you will see most of the time when a candle forms, how many highs and low you have? You only have one high and one low. So the smartest way to trade is to wait for the high to form and enter somewhere here, or to wait for the low to form and enter somewhere here. Let me show you again in green now how you can enter continuations. After price has reversed, you know it has broke structure and it came back inside here in the lower time frame. You can enter here, then it can continue with you here. This is a continuation. You can also find another level and enter here for continuation. As soon as you reach a level, you get out. But when it reversed, then it broke structure to the downside. It created a level. You see this? We can have a week here. Then you trade another continuation. How many continuation can you have? A lot. Then you wait for here. Price comebacks again, maybe weeks inside this, and then continuation. Okay? You have 1, 2, 3, 4 trades. You can have a continuation every day. But some days are like this. These days are days where price compress before it can expand. So when you see days like this, you won't know in the beginning. You won't. You can lose once and then you wait. And then you know tomorrow you can have many entries to continue in the same direction, or you can just wait for the news. Many times this will happen the day before a major news. So if you know there is a major news tomorrow, why are you trading today? Or if you know the major news will move in New York session, why are you trading in London session? Because price will be consolidating, waiting for the manipulation, and then expand higher. You see? So the smarter trader is not it's not that he has to follow the trend. No. What he has to do is to know if he has to continue, if the reversal have already happened. If you know that the reversal have already happened, it means now you know where the price is going. And when you know the price is going, you can find continuations entry. Continuation entry are easier to spot than reversal. And when you reach this level here, down here, then you get out. If maybe you can take another continuation here, but here, okay, you found this as a reversal and then you lost. And you see here, you have another continuation, you enter here, and then you finish the week. So how many continuation? 1, 2, 3, 4, 5, 6. You have 6 continuation against 3 reversals with one that's was not okay here, not clear, and you lost money here. So if you want to trade reversals, you must really know when the highest point has formed or the lowest point has formed, because the candle only have one high and one low. But the continuation, you have many retracements inside that could give you entries. So this is important for you to understand. Why? Because you will catch yourself running behind, trying to catch the reversal, or when the price goes away, you're trying to enter without waiting. Always wait for the pullback. And if price doesn't come back, change the pair. Change the pair. Why are you trading only one pair? We go like this. Every week we go look for an opportunity on a different pair. Today we saw on Euro USD. Tomorrow it will be on GBP USD. I've already marked the levels and I'm waiting. And if price doesn't give me that, I will have to tell you this. Just look at how I trade. I use the candle behavior. When the price form a bearish candle like this, I'm expecting to see the next candle to be bearish as well. I can show you. I saw this on Euro GBP today. Let me show you here. You see this? It's on 5 minutes. Let's go on H4. I'm trying to catch the next H4. Now look at this. I'm gonna clean this and remove this. We're waiting for this to reach here, and then we can drop. Okay, you see this is Euro GBP. We have another opportunity here that we could take. Okay, I'm going to remove the replay button. Okay, what you are waiting for, guys, this is another easy way to look at the market. When you see, I've already told you, when you see a candle close in breakout like this, the wick was here, it closed bearish. Okay, I hope this is a rectangle. This looks like a potato, but look, this is how I see the market. The red are red, right? The bearish. When I close in a breakout, it means what? It means my candle broke the lowest point of the previous one and closed there. Weeks or no weeks, I don't care, but I know it closed in breakout. The normal law or rule that you have to expect here is that the price will open at the close of the previous candle, create a high, and then target this low here and close bearish. That's what happened here. When you had this guy, you had this candle here. That's what happened here. We came and target this, and then we close inside, okay? Then I'll target this. Then I close inside. Then I target this. Then I close below. Now here it's a continuation. Look at this. Now if you have a bearish like this, and somehow the candle create a low point and then return inside, now what do you expect? The next candle to open, creating a low, and to continue higher. This is how the reversal happened. This is how the reversal happens. And here it's a continuation, here's the reversal. So if you look at the candle like this, you won't be surprised to find something like this, because this is just after a green candle that closed inside, and this guy here is just the next candle. Did I say that is a daily? No, this is just an H4 candle. So what am I showing you here is actually how you could have come at any time in the market and you can find a trade. You can come at any time. You can see here. Let me show you. You have this. This is an H4 candle. Okay? Okay, we say this. This candle is not existing yet. So what time is it? It's 5 a.m. in the USA, New York time. We see price create this and close like this. I will go now, drop on M15. I want to know what's happening here. But you see, M15 is confusing. So when you come on H4, the candle that you mark as candle one, let's type it, C1. Candle one is here. Where's candle two? Everybody can see here, right? This is candle 2. I'm trying to catch the candle 3. I can mistake myself and pick the wrong candle. But if you look at 1 a.m., 5 a.m., how they behave every day, you can guess the 9 a.m. candle. This is just Euro GBP. It works on everything else. So for me, I will mark with a vertical line, boom, and I will also mark the next vertical line, 9 a.m., even if the price did not print yet. Then I will go on M15. Look at what I have. On M15, I have 5 a.m. The candle formed and created this. Now I'm expecting to trade what? I'm expecting to trade the 9 a.m. 9 plus 4, it's here. So whatever you're trying to do, you're trying to find a trade inside of this move here. What happened on H4? I'm trying to show you now. We had a sweep first. Price swept. This line is just showing that we tried to push price lower. Let me remove this candle 1 and candle 2. You already know now. And remove the 5 a.m. So now you know price swept liquidity down here. What am I supposed to see? I'm supposed to see a candle that will create a low and then continue higher. That's what I'm expecting to see. Now, if I drop on M15, I'm trying to trade inside of this time here. You already see this was the sweep. So this candle swept liquidity here. Is it clear? No. If you want, you can go on lower time frame. So you have more swing points to play around with. You see that? You have a sweep here. Where did it come from? Came from here. When did we close above it? Boom, here. We closed above it here. Why am I marking this like this? Because this was a range. You can see it. This is just a range. When did we break out of the range? It was here. What time is it? 8:30. Look at exactly what time price came back at 9. You see? Price came back at 9, giving us a trade. But you can see here, this is the window you're observing price. You are waiting to see how price will play out. Now, 10 a.m. starts. Look, you have the opening of 10 a.m. You have the opening, it's here. It opened where? Here. This is where 10 a.m. candle opened. What I'm expecting to see is price create a low and then continue higher. Where am I expecting to see the low? I told you what, if you already have the sweep and a break of structure, you know you have a reversal. You can validate your reversal with many other confluences like divergence, time of day, etc., etc. But you know now, price is not coming here for the next H4. The next H4 means the next 4 hours. So now I'm trying to find an entry inside of this guy here. I must be very careful because I know we broke structure here. That's going to be my entry. Simple. I can take my entry here and let it play out. I can also use a big number if I have one around. I have the 250 here, 250 somewhere around here. I can also take the fair value gap, whatever entry you test and you see that it fits your personality, you just use it. Me, most of the time, the M5, I just take the change in the direction, which is also the breakout on M5. I'll take this. This is my change in direction. Validate. Why? Because we already rejected. We broke out of this guy here. And I wait for price to drop. You see? Price dropped inside my guy here. I take a trade. Where am I targeting? I have Asia high. Asia high means what? Around, if you mark the beginning of the day here. Okay? Where's the highest point? The highest point of the day is here, right? So I can just target this. I'm not going to look for too much stuff. But if the imbalance is big, I will most of the time protect like this, target my 2.5. If price takes me out, no problem. If it give me the trade, I know I'm expecting to catch the H4 candle. And that's what happened. You see that? This is me catching the next H4 candle. We were here. We saw how price reversed at 5 a.m. We came on M5. We marked the beginning and the end of the next candle. As soon as it opened, we marked the opening of this candle. Okay? After we opened the opening of this candle, we just got a trade. This is high profitable and recurrence. It will repeat itself almost every day. When you go on H4 and look at the previous day, and you look for 5 a.m., you see 5 a.m. here? I want you to see it by yourself. This is 1, and this is what? 5. So now we had a sweep again. We close where? Inside. If I'm looking to trade, what will I take? I will take this, the opening of 9, and mark as 1 p.m. I will drop on M5. Did I have the sweep? Yeah, we had one. Where is my change in direction? Means the last up move that we had before going down. It's here. Have it here, right? This is the change in direction. You can validate with any conference you want, if it's a trending moving average, whatever you want, but you must validate that this is the highest point between candle 1, candle 2, and candle 3. And now, what are you targeting? You're targeting this chunk of time. It's one H4 candle. Do we see how price will come back inside? I don't know. Maybe price came back. Price came back. You see, it gave me what? This entry. On my change in direction, I could have respected this. Only use, let me show you. Only use the price action inside my time range. So I can take like here, mark this as a sweep. Okay. You see that? You see how not easy, but simple it is. Okay. Not many components. You just look for the H4, change of direction, and then you go on M5. Only 2 time frame. You mark the H4 beginning and the H4 end, the one that you want to trade. Once price create a change in direction, we already had one, but I'm just showing you in case you came late to the market. And now price dropped, sweep. Where did I close or test this low here? You have it. This is the new change in direction. I told you what? As soon as you know that you had the highest point of the day, everything is just continuation in the direction of your trend. Because if it's the highest, it means we need to drop. Okay? And when you have something like that, you see how many times price come on your change in direction? Sorry. And you could sell either here or here. And price will drop for the next H4, but it can come back later. But you already had your sell. Okay? You see here. Let me show you. You took a sell here around 11. Protected. This was changing the direction. Okay? And then you target this. It's 1.5. Let's go for 2.5. I hope price will come lower and take us, because we have a drop here. I don't know if the afternoon will go up or down. Okay, you see? So price gave us something here. We had a 2-hour trade. 2.5 is down here. That's how you can manage your trade. Okay? And you also have rules, because sometimes the trade take too much time, because this is already Asia session on Sunday. This was on Friday, right? Why are you keeping this trade for so long? And when it's reached here, it's 5 p.m. You're supposed to close your trade here. You took out your trade and you continue. Just do that. Go on H4, just play around, look at 5 a.m. on different pairs. You can go on GA, look for 5 a.m., but look more of the major pairs. Euro USD, for example. This is 5, you see? 5 rejected here. We had a reversal. This was 9 a.m. and 11. 9 a.m. and 13 here. This was the day before. This was on Friday. You see, you had a sweep here. This is the day that we continue in the same direction. So we are not buying. We saw the rejection on the H4 candle. I mark my vertical line on the 9. And the next, here, I drop on M5. Look at what price did here. Did I have the change in direction? I had the change in direction here. Did price come back? No, it did not. But you know where it opened. Where did price open? Here. Let me show you. And you are trading at continuation because you know what you're trading. You already know we had the highest point of the day here. I'm just trying to sell. Okay, I'm just trying to sell. I'm trying to find an entry point where I can sell. If my candle opened here, this is the opening of my H4. So it pushed up and then went down. And if you observe all this, let me go on M15 so you can clearly see, where is the last bearish move before we push up here? It's down here. This is how you find your change in direction. Okay, it's when you had the last bearish move. For this one, for example, for this one here, where's the change in direction? Down here, you see? The last series of upgoing candles will be marked by the last bearish one. This is the one showing that, okay, we start going up. Same thing here. This is showing that we start going up. Price came here inside of the M5 in the H4 that we're trying to trade. As soon as price opened, it came back here. So if you mark this already as your change in direction, you can enter on a change in direction. You can target your 2.5 R. Even if I take all this, no problem. I will keep targeting my 2.5 R. Here it's only 2, no problem, but I make my money. See? Because I'm targeting this. And if you want to close before, you can target and protect right above this, or if you find a level that could be retraced to this fair value gap, you protect above the fair value gap. But what I'm trying to tell you here is you should know what you're doing and you should know what you expect. And when you do this, one per day, you find the perfect candle, the one that you see an engulfment created, you just target the next candle. Just look for this on H4 between 1 a.m. and 5 a.m. As soon as you see something like this, you know, okay, I'm trying to catch the next one. The next one will be with what? This candle. And if you come here, you mark the beginning of this guy and the end of this guy on M5, inside of it, you will look for the opening of that candle, okay? But price will not stop there. Price will open, give you a low, change in direction, maybe that formed around here, and then, sorry. So you have the opening here, the drop, change in direction that happened here, and then you can just catch this move. And when you reach here, you get out. You have your trade, stop loss below a low that you will have here, target 2.5 R. You made your profit, end of the day, close. If you have a setup, like I showed you on Euro USD here, if we remove this replay, like here. Everybody know this strategy. You can find it on my YouTube channel. I just gave you another one with the H4 expansion. You just find two H4 that engulfs each other and you go in the same direction. If you want to trade with the H4 engulfment, you wait for price to come inside, like here. Price comes inside, and then again and again. You can see here, this was 9 p.m. This is 1 a.m. This is 5, and this is 9 a.m. You see how the two approaches can sometimes do the same thing, but each one will give you an entry. And when you consider this, and you take what I just told you about the compounding effect, you can find yourself scaling a small account and bringing it to a bigger amount. What I suggest, 2.5 R. If it's a small account that you want to build up, you can risk between 2 and 5%. I don't think the 1% idea will do it for you when you have a low capital like this. You have to risk a little bit more, but you must be very, very accurate on your lot size. So you have to calculate your lot size before. And then when you trade, every time you make a profit, you just reinvest the other one. So with 2.5 R, if you trade, let's say 2%, you will make 5% every time. Okay? And if you risk 4%, you'll make 10% every time. And when you have 10% of benefit, if it was 500, you have 10% more, it will be 550. And that 550, you look for 4% again of this. You target 2.5. What are you looking for? You are looking for H4 candle that formed an engulfment with the H4 on 5 a.m. Here it did not form, so you don't do it. You know you are bearish, you reject it from this level, you use the other strategy. Because as soon as you have this engulfment, you can have this zone marked. You go on M30 now. M30 gave you another zone here. Inside that zone, you go on M5, and M5 gave you an option. And I still make the 2.5, despite the entry that did not give me the right amount of move. Here you can have same thing. You target, you put 10 pips of stop loss, and you target 25, or you risk 80, and then you target 2.5. You can still have it, okay? Depends on how you manage your trade. I gave you a full process to grow your accounts slowly and slowly. I have another that I will do specially for prop firms to show you how if you have one account and different sub accounts, and your goal is to trade every day and diversify your portfolio, you could lose half of the time and still make money. Pass the challenge and then make money here and lose here and still withdraw $1,000. You see that? So it's not I know trading seems complex, but it's easy. I know it's complex, but it's easy. And some strategy are very simple. So you must think about money management. How am I risking? Why? And what am I targeting? Remember the 3 factors. Your time will define how far you're going in the duration. Your frequency will be how many trades you take per day, according to the strategy. With this one, for example, you only have 1 trade. But if I want to take option 1 and option 2, I can take 2 trades per day. But all this will work when you master your risk reward. Because if I take this trade and target 5R, I will never reach my target. So you must be very careful what you target. Stop being greedy and target something realistic that you can achieve in one day. And once you reach your 2.5, you close your trade and you wait for the next day. Okay? This is how you can manage your account and bring it up. With the community we have here, you can have more than 3 trades per day. So you just diversify your portfolio. If you have like 300 trade, $300 or $500, maybe you should just divide them in two separate accounts or 3 separate accounts. One account you'll only trade Bitcoin, for example. One account you only trade Bitcoin. Another one you only trade Forex. Another one you only trade gold. For example, that's for example. If you lose here and then you win here, you still win because you're 2.5R. You see? So I think this is the reality that people don't talk about, and people just come in the market expecting stuff without understanding what factors will make you succeed or not. So I hope you understood and really got something from this call. I'm about to close it up because I think tomorrow we'll have something on GBP USD. I'm expecting that. And also Euro GBP had something coming. This was just to explain to you guys, but I'm waiting for price to go back into this zone. On H1, you can see it clearly. We are waiting for price to reach this level. And as soon as it reaches this level, this big line here, look on the daily time frame what it is. It's a key level. It's a very, very important level where price could return before we drop. So what I want to see on Euro GBP is this. That's what I'm expecting. If it doesn't do that, no problem. But I wait for price to reach my zone. And once it reaches my zone here, I will now observe the M30. M30 will give me something. We are close. We are very close. I think London session tomorrow will give us the trade here. And this was marked way, way before. As for Euro USD, we are inside the move. What I'm targeting is here. We will have a sell. So you already know the week has started. This is Tuesday. This is Monday. Let me mark the beginning of the week. Sunday. Here. Let me take all this off. Let me show you the end of the week. Thursday, Friday, and Sunday. Here. This should be the end of the week. This is where we are going. So for me, I know we are bearish. Why? Because we saw it. We saw we were bearish on the weekly time frame. The weekly time frame showed us we're bearish. We know we have to drop. Okay? So before we touch this guy here down here, look at the big move dropping. Okay? I'm expecting price to come here, touch this zone before we can even think about buying. Because we did not sweep anything here. We are still waiting for price to sweep these lows. That's why I say I'm bearish. Okay? Here now, on M30, all I'm waiting for, let me remove this. Thank you, Gwen. So now here you can see what price will give us. It's inside of this guy here. We already had our M30. The H4 that we had, let me show you. The H4 that we have, it's an H4 cell. We have it here. It's an engulfing. You can see it's an engulfing, right? This is an engulfing. So price came out and then pulled back inside. We went on M30. M30 gave us something here. Okay. we had, I think I can remove this now. Everybody knows it's going down, but we can still have this arrow here, so it can help us understand where we're going. But now here I have something very, very important. I have a sweep, remember? And after a sweep, I also have a change in direction. So where do you expect prices coming back? To this line, right? This line will be tested again. Price did this and did this, but I have a precise entry style that I will use tomorrow. If price comes back, I will use this as liquidity. So I will go on M30 or M15, as you wish. I'm used to all the time frames, no problem. I will find my ERL here because this is the internal range liquidity that must be taken out without taking our high here, because we know we've created the highest point of the week. This is the week, right? We started like this, but this is the this is Monday. This formed on Sunday. I don't count it as my highest point of the week. I know the week started as around here and then we dropped. So this is the last formation, the swing high, that I think must be the strongest one. Also, because we reached this retracement point here, which is very important zone. We reached it, touched it, and then dropped. Price is showing us that we have now the right. Look here. We have now the right to sell. This was the last close before the gap. Price tested it. On the M30, it gave us this line here, which is exactly where we are. Whatever you mark on this chart will show you that here, even the volume profile, if you want to show the volume profile, if I go in the beginning of the week and then until now, you see this price, the most volume were traded here. That's why I don't consider this. I think this is the point where price will never break and go up. This is the resistance that will push price down. So I have many confluences showing that price will go down on M30. Okay, and on GBP USD, it's the same thing that we said. We are waiting for price to come back. Okay, on Euro USD, I'm ready already. I'm waiting for price to return to my zone. I will put my alert here. Okay, let me remove this volume profile, and price will come here. If it doesn't turn on my changing direction, it means it's coming from the IRL, sorry, I said it in French. But now on H1 or H2, I will mark this as my key level. I'm waiting for price to return here. Okay, guys. Okay, just put it as a H4 because I know it's a H4 key level as well. You see, it's an H4 key level here. So I'll be waiting for price to come and test this. So the obvious level to test for me will be this guy here. First proposition of entry, we put 20 pips of stop loss, right? Why? Because I have another strong level here, which is a weekly. You see, I have a weekly level here that's very strong, and it's also a daily level. You can see here. So I expect price, if price is stubborn, price could probably come back. If there's a news that will push price without us knowing and noticing, price could reach here. So that's why I put my stop loss above it. So if price touch it, I'm not out. Okay. So this is just tips I'm giving you guys. This is very advanced. I don't hide things from you guys. I give you everything that I know. That's why I told you it could be complex, but as soon as you spend your time on a chart, you will know what to do. This is, for me, the trade that we should have tomorrow, the minimum target, but I will target the lower point here. The lower point is my definite target. So if price move up, stop here, drop, good. If it stop on this line, I will have to review my stop loss, but I will do that as the price is moving, because I will send you a signal. I will send you a signal in the community tab that is correct. So be careful. It could happen anytime. And yeah, we have 25 pips of stop loss. I can target 100. And as you are here, sometime you can just go here and watch the Forex Factory and look at the market, because you should expect and know what you are waiting for. You should be anticipating price. Okay, Tuesday, Wednesday, Thursday, tomorrow we have, yeah, we have something here. You see, we have big news. So during London, if I see a consolidation, I know price will move during New York. Okay, and this is Euro USD. You see, this could be the trade tomorrow. So thank you guys. Thank you again, and be blessed, all of you guys. Thank you for being part of the call. We will have another call on Sunday. My calls is Sunday, Monday, and Tuesday. But yesterday I was not available, so that's why I did my call today. But lucky of us, the price was exactly giving us what we predicted. So we will see tomorrow if we will have a sell on Euro USD. This is the weekly price action. Price is going down. We are expecting to continue down. We test at least this level, and from there we can sell. From here, and from here we can buy. But we are selling for now. Okay? So all of you guys, bye-bye. Tap zeros in the chat if you can still hear me. Thank you. Thank you all. Be blessed and focus, train your eyes, continue and practice on the charts. This is what will make you great. Okay?